Hello, everyone, and thank you for joining today's webinar. We'll just wait for another minute to allow a few more participants to join. All right, let's get started. Once again, thank you all for being here. My name is Shikha, and I'm really excited for the next hour that we'll be spending together. Before we begin, just a few quick housekeeping rules. This is a recorded session, and all the participant cameras and microphones have been disabled. If you have any questions during the session, please use the Q&A box to submit them. We will try to answer as many as possible during the last 10 minutes of the session. Okay, with that, let's dive right in. We'll begin with a very quick round of introductions. I'll start by introducing myself, followed by my colleagues. Hi everyone, my name is Shikha Saini. I have over 12 years of experience in the US tax industry with a strong focus on the corporate taxation. I specialize in ASC 740 and have worked extensively on both federal and state level tax compliance. I am also a qualified enrolled agent. Before joining Windy Street, I worked with Deloitte, where I was actively involved in managing large corporate tax engagements. Passing the mic to Abhimanyu.
Thank you, Shika. Hi, everybody. My name is Abhimanyu, and I have 9 years' experience in US indirect taxes. I have worked on several indirect tax projects such as voluntary disclosure agreements, registrations, consulting part, and also on the compliance part. Before joining Windy Street, I was a part of Deloitte for 5 years and PwC for 1 year. Thank you. Passing on to Divya now.
Hello everyone, I am Divya Khatri. I currently lead the 1065 real estate and hospitality practice for one of our key clients, a top 100 CPA firms in the US. I have close to 9 years of experience in the industry. Prior to joining Windy Street, I worked with leading global firms like Deloitte and Bechtel, where I was involved in a wide range of partnership structures, including operating, investing, financing, and real estate, along with a few 1120 and 1120S. Well, that was all about us. Now, before we dive in, let me quickly walk you through the agenda for today's webinar and highlight the key takeaways you can expect from today's session. So, over the past 2 decades, India has emerged as a global hub for outsourced services. And this isn't about cutting costs anymore. It's a strategic move that helps firms grow, stay competitive, and serve their clients better. We will briefly discuss about why outsourcing is important and why it's essential for a firm to understand its reasons for outsourcing and clearly identify the problem it aims to solve. While varied services are now being outsourced in India, including accounting, taxation, financial due diligence, audit, and more, today's webinar will specifically focus on tax outsourcing to provide a deeper understanding of its scope, benefits, and implementation. Moving on, we will talk about the different outsourcing models available and practiced in India. Then we will talk about factors one should consider when choosing an outsourcing partner. And to conclude, we will walk you through a few case studies from our existing clients to illustrate real world outcomes, and will then open the floor for any questions that you may have. Now, let's try to understand why so many CPA firms are turning to outsourcing, especially to countries like India. So, we are all very well aware that there's been a significant drop in the number of public accountant aspirants in the US, making it very hard to find and retain qualified talent. Meanwhile, the Indian market has matured significantly with a growing pool of professionals trained in US tax, GAAP, and key platforms like Go System, CCH, CopTax, OneSource, Avalara, and more. Added to the time zone advantage and the ability to scale quickly, it's easy to see why so many firms are turning to India to build reliable, high performing supporting teams. Moving on, let's closely look at all the factors one by one. The very first one and the most obvious one being cost savings. One of the main reasons CPA firms choose to outsource to countries like India is the substantial cost savings. Well, often exceeding 50% compared to in house operations. Next one being access to skilled talent. With Big Four started the trend of outsourcing nearly 2 decades ago, owing to which India now has mature talent available with specialized technical expertise and varied skill sets. As an example, we have so many people in India who can work on high net worth individual returns and dual status returns. Talking about scalability, outsourcing enables CPA firms to quickly scale their operations up or down depending on the seasonal demand. Moving on to faster turnaround, India being ahead of US for roughly around 10 to 11 hours. The time zone difference between the US and India allows for a follow the sun model, and work sent at the end of the US business day can be completed overnight in India. Lastly, we'll talk about diversifying attrition risk. By diversifying your team geographically, you reduce your dependency on any one group and ensure greater business continuity. Moving on to scope of outsourcing. Now, for you to understand better, we've divided the scope between direct and indirect. And for the purpose of direct tax, our team provides end-to-end support across the entire tax return process. We handle everything from preparing tax estimates, managing provisions, to filing extensions and completing returns, whether it's a 1040, a 1065, along with 1120 and 1120S. Along with that, we also take care of post filing support, including responding to IRS or state notices and helping resolve any client grievances. Now, I pass on the mic to Abhimanyu to talk in detail about indirect tax.
Thank you, Divya. So, when it comes to indirect tax, there's an understanding that only compliance is outsourced in India. But this itself is a huge field and it includes a lot of things which are and can be outsourced. Starting with what all constitutes of indirect taxes. The most prominent, which everybody knows, is sales and use tax. But indirect tax also consists of a lot of other taxes. For example, property taxes, bottle bill, alcohol, tobacco, excise, and other taxes. For this webinar, we'll keep our focus on the sales and use tax part. So starting with consulting, the basic thing which can be outsourced is researching tax laws, and nexus and exposure research for the clients. Post the exposure research, we had the talent pool in India has also been doing the voluntary disclosure agreements and amnesty programs since from a long time. Now, tax registrations are also an important part of the sales tax consulting and compliance both because the states align the account and the tax rates accordingly to the initial nexus selection. Once the registration is completed, the client can always opt to complete the delinquent or the future filings in-house or outsource them to a qualified outsourcing partner. Passing on to Shikha to discuss the different outsourcing models.
Thank you so much, Abhimanyu. Moving ahead now, we will discuss the prevalent outsourcing models. Given there are multiple models that exist in the market, For the purpose of this webinar, we have divided our discussion on outsourcing models into two categories. First is the teaming model. We will talk about different ways in which you can staff your offshore team. Second is the pricing model. We will discuss how the outsourcing engagement is priced. It depends on how the teams are staffed, so both teaming and pricing models are interrelated. So, first being the teaming model. Now, there are primarily two ways in which offshore teams are structured. The first one is the dedicated team model. Under this, the offshore provider will set up a dedicated team just for you. Generally, these professionals are hired externally and they will be 100% dedicated to your jobs. Now, this model helps you develop a global delivery team where you can build rapport with the offshore team and benefit from learning curve advantages, given you will work with the same team member. Second one is on demand team, also called the flex model. Under this model, you do not have a dedicated team basically, and you may work with a common pool of resources on need basis. So under pricing model, few common ways in which outsourcing engagements are priced include first being the fixed dollar per FTE. Sorry, you pay a fixed dollar amount per FTE per month. Now this is more common in dedicated team setups. Under this model, the offshore team members work as an extension of your own team, and the actual cost does not vary due to utilization. Second is a fixed dollar per return. This is more common for on demand model or basically the flex model, where there is no continuous engagement. Depending upon the volume of return and the complexity, the offshore vendor can provide basically a fixed amount they will charge per return. But definitely there might be some minimum commitment that may apply under this model. Third is the project based model. Now, a lot of times firms outsource special projects to offshore teams, which are more consulting in nature. Now, this model works as a typical fixed price project where the offshore service provider commits to a fixed dollar amount for a project where predefined scope of work. Now, there might be overruns in case there are delays or material changes in scope of work. Considering there are quite a few ways to model an outsourcing engagement, it is imperative for you to assess your requirements before you basically dive into evaluations of these models. What is the work volume, frequency of what volume, and level of cost commitments that you are ready to sign up for. Moving on, Abhimanyu will now shed some light on how to evaluate an outsourcing model.
Thank you, Shikha. So the first criteria which I will be talking about is existing client records. One of the most important considerations when evaluating an outsource partner is client references. It is absolutely normal, first of all, and highly recommended to ask for references from existing clients. So our strong recommendation would be to speak with at least two current clients, and this will give you the direct insight into their outsourcing journey. What worked well for them, what challenges they faced, and how the partner handled it. So there's no reason to believe that your experience will be drastically different from those who are already working with the vendor. But talking to real clients helps you validate your capabilities, assess trustworthiness, gain clarity on the day-to-day working relationship. The second pointer in this slide would be an option to interview. So the talent pool in India is incredibly diverse, from those handling only preparing returns to professionals who have led entire team from India. So it is essential that you interview offshore team members prior to onboarding in order to assess their technical expertise, communication skills, cultural fit, and responsiveness. So while interviews in India often focus on technical questions, from a client's perspective, soft skills and clarity in communication matter just as much. The third point would be data security. While data security is often discussed in detail during the onboarding phase, it still remains an important evaluation criteria. So in this, you may not be able to test the outsourcing partner's security systems directly because much of it depends on your internal IT setup and how you handle the data. data access. But it's still very crucial to know that what is the seriousness of the vendor when the topic of data security is discussed. What are the certifications they hold? For example, SOC 2 or Type 2 and ISO 27001, and their flexibility in aligning with your security protocols and their IT environment. So basically, I mean, look for a partner who's security conscious and willing to adapt for your specific needs. The fourth point would be cultural alignment. Now, we all know that the US and India are matched on a different level culturally. We've seen that both teams share similar values and work styles, but the partnership works better and lasts longer. So, like I said, they have different cultures. For example, how they communicate, how they approach work, and even other policies can vary. So it definitely helps to check what kind of employee policies the vendor has. If they have people feedback surveys, so how have the surveys been, and how their day-to-day team works. If there's a good cultural fit, of course, teams will connect better and the work relationship becomes smoother and stable over the time. The fifth point would be attrition. So, employee attrition is, of course, a critical factor to consider, especially in tax outsourcing, where turnover tends to be higher. High attrition is often a sign that employees are either unhappy with the quality of work or of course, they're looking for more growth and learning opportunities. So as a client, you want continuity. No one likes, frequent changes in the team members. So always ask your outsourcing partner about their historical attrition rate and the average tenure of the team members. A low and stable attrition rate typically reflects good employee engagement and sustainable operations, both of which are key to long-term success. The sixth point would be contractual matters. So I'll divide the sixth point into four points further on. The first point in this would be type of relationship. So the type of relationship, if you're working with an independent outsourcing company, the people on the team are their employees and not yours. So you don't have to worry about their benefits, salaries, or taxes as the vendor handles all of that. The second in this would be termination. So contracts have a notice period requirement. It is important to understand what that is and if it aligns with your expectations. Third would be non-solicitation. This means that you cannot directly hire the offshore team members during or shortly after the contract, unless it's clearly allowed in the agreement. The fourth one would be non-exclusive setup. So most outsourcing vendors work with multiple clients and not just one. You might get a dedicated team, but the vendor can still work with other companies like yours. If you're worried about this, just ask how they ensure confidentiality and data security. The seventh would be the onboarding time. So, as we have already discussed in the previous slide, onboarding time depends a lot on the outsourcing model you choose. For example, if you go with a dedicated team model where you interview and select each team member, it usually takes around 3 months to get started. Why? Because most of the professionals in India have a 2 to 3 month notice period before they can join your firm. Plus, adding on to this, the interview and the selection process also adds a few more weeks. So, unless the vendor is assigning people from their bench, which is the already available team, setting up a new and dedicated team takes time. And on the other hand, if you choose an on demand model, the onboarding can be much faster. Sometimes, who knows, even immediate. So, that is why it is important to ask your partner what timeline you should expect based on the model you're going with. The eighth point in this would be pricing models. So, as already discussed in the previous slide, the pricing model is also important because it directly affects your budget, flexibility, performance, and your accountability. To summarize, pricing model should match your goals. It is not just about saving money, it's about getting the right value, flexibility, and team setup for your business. The last point in this would be overlap in working hours. One thing to keep in mind is that India operates on a different time zone if compared to US. So there's only an overlap of 3 to 4 hours with US working hours. Some days there can be issues. For example, a return is due and you need the team to be available for longer hours. And the second point in this can be that you cannot schedule calls during US evenings. So considering that India is 9 to 10 hours ahead of US time, Please ensure to ask about the standard working hours and what percentage of those hours will your outsourcing partner offer as a overlapping time with the US. How flexible are they with the occasional extended or the odd hour requests? Passing on the mic to Shikha to discuss the typical tax engagement roadmap.
Thank you so much, Abhimanyu. Now, moving on to our next slide. So, one of the most common questions we get is how is the work done while ensuring quality when it's outsourced? Now, this process begins with compliance. As you may already know, before we can begin any outsourcing activity, it is essential to actually obtain a signed Form 7216 consent from the client. Now, this is a regulatory requirement, and operations can only commence once this authorization is in place. At the core, once the signed copy has been obtained, it begins with clear communication and documentation. Standard operating procedures, checklists, and defined workflows ensure everyone is aligned from day one. Now, once we receive the signed Form 7216, we begin with the kickoff call. It is basically to introduce both the teams and key points of the contact, understand your goals, expectations, and preferred ways of working. Sometimes this kickoff call is also useful to discuss the entity background, which might include any prior year adjustments, any sales or transfers, or any specific reporting consideration that may have happened during the year where we are filing the return. Now, on this call, we align on timelines, deliverables, budget, and communication preferences. Now, following the kickoff call, we confirm the budget per return or engagement and align on the volume and complexity of work, which is basically the work assignment. Now, work is assigned based on the experience and the complexity of the return. We ensure resource allocation matches your timeline, your budget, and your expectations. Then comes your check in calls. As already discussed, overlap is important due to different time zones to discuss any updates or questions or any data issue. Now, once the preparation phase begins, we ensure regular communication to stay aligned and keep the process moving smoothly. For example, in case there is a change in deliverable timelines, we might need to align or reallocate work accordingly. In addition to scheduled check ins, our team is always available to connect with US counterparts on an ad hoc basis whenever needed. Throughout the process, we encourage open communication. Now, if something's unclear, both teams can speak up and collaborate. For example, in case, when you're preparing a Form 1065, if the K3 does not tie with the K1, our team can flag it before it causes any delays or issues in review. Next comes your tax preparation and review by outsourcing team, ensuring quality assurance. Now, every return undergoes a multi-step review process before it is delivered back to you, ensuring quality assurance. Our approach here ensures accuracy and compliance with applicable tax laws, consistency with client-specific preferences, thorough checks by experienced reviewers, including the engagement manager. Now, this layered review framework helps us deliver high quality and reliable work every time. For example, a senior reviewer checks calculations, formatting, and completeness to make sure it's client ready. Next step is the feedback. Now, once all the returns have been delivered and filed, we make it a point to sit down with you to review how things went, what worked well, what did not, and how and where we can improve. Now, this is where two-way communication becomes essential. It is not just us sharing our observations, but also hearing your feedback and suggestions. Now, this collaborative approach helps us continuously refine our process and better align with your expectations. Last being the trainings. At our core, we believe in continuous improvement. During lean periods, we proactively invest in upskilling our professionals, not only just on tax technical matters, but also on key areas of improvement which are basically identified during the busy season. We stay current with evolving tax regulations, reforms, and ensure our team remains proficient in the latest tax software platforms. Now, this ongoing focus on development allows us to return each season stronger, more efficient, and better aligned with your expectations. For example, if you use a unique naming convention or any internal checklist, we will follow that to ensure consistency. To sum up, we handle the process from start to finish, but always in collaboration with your team. From getting the right permissions to final review and feedback, we work as an extension of your firm seamlessly and securely. Moving ahead, we would love to share few client impact stories that highlight how our collaboration has helped our clients. Passing the mic to Divya.
Thank you, Shikha. Let me give you a quick client snapshot. Our end client was a high net worth individual with a wide range of investments and income sources. Definitely not a one size fits all tax situation. What made this return complex was that there was a need to separate tax exempt interest at both the federal and the state level. Several foreign forms needed to be filed, like the forms 8865, 8621, and the FBAR form 114. Multiple hedge fund K1s came in, all with different types of income that had to be correctly classified. At a glance, we did about 15 federal and state returns in total and invested about 50 plus hours. Now, let me tell you how Windy Street helped. We built out all the work papers from scratch, analyzed new income sources to figure out which states required filings, reviewed foreign investments to determine what forms were needed, rolled forward complex fixed assets in line with IRS rules, set up Go system for both resident and non-resident returns, and finally supported the client all the way through to ensure everything was filed on time, no last minute surprises. Moving on, we would like to share another story from one of our real estate clients. And to give you a little background, this one is about one of our clients under a dedicated teaming model where our team acted as an integrated extension of theirs. Coming to client overview, the end client was a US based firm, investment firm that owns, develops, and operates real estate globally with a focus on hotels, resorts, and residential properties. Now, what made this complex was the fund had a multi tier structure with both lower and upper tier entities. There were tax implications on asset sales and disposals. It involved the sale of partnership interest and partner transfers. We also had to address the tax treatment of installment sales. At a glance, we worked for around 300 plus federal and state returns for about 450 plus hours. And how we at Windy Street helped analyze the full fund structure and identified all key entities involved, assessed and corrected tax treatment for different types of income, expenses, and disclosures. We determined state filing requirement based on nexus, automated their work paper preparation process, and identified any required tax selections early in the process to avoid last minute surprises. Now, Abhimanyu will talk about the indirect client that he worked on.
Thank you, Divya. So basically, these are two of our clients, but because the situation and the problem in both of them was similar, so that's why we have mentioned both. Both the entities were selling tangible personal property, which is subject to sales and use tax, but they never registered nor collected any kind of sales taxes, which was a huge mistake from their part. Fortunately, they never received any notice, but still they had filing obligations in all of the states. Now, what was the complexity of that project? It was first of all a multi-state nexus and taxability study. Why? Because since their products were being sold in all across the US, we had to conduct a nexus study and a taxability study to just check in what states have they crossed the physical or economic nexus, And if they have crossed, how much is the exposure they owe it to the states first. This was the first calculation. When we did that, we found out that it was a huge exposure, and we had to figure out different ways to mitigate the money which is going out of the client's pocket. So the third complication in this was that they were registered for in most of the states for other tax types. Now they, as I told, they have not registered for sales tax, but they were registered for other taxes, for example, corporate income tax, payroll taxes, and other kind of tax types. What we did was that we offered to complete a 45 state and a 33 33 state VDA projects for both the entities with more than 80% of integration. Now, what do I mean by integration is that integration is the percentage of hours worked in India team as compared to the percentage of hours worked in the US. So if I say that 80% of we worked with 80% of integration, that means that the project was completed 80% of the project was completed here, and the rest 20% was completed in the US. There was a new Tennessee amnesty program in which we did a detailed research and got the Tennessee liability, which was of course huge, waived off in its entirety. Then we research the tax laws and if there are any exemptions which are applied on our client or our client's client products. There were several exempt customers as well for which the client did not charge the sales tax, but they did not have the right documentation to support those exemptions. We checked those certificates and we cautioned our client against collecting the right certificate. Me and a few of the other team members were listed directly on the state power of attorney forms, and we coordinated directly with the state. So the US only used to step in where to review the exposure VDA spreadsheets, which were supposed to be sent to the client and then to the state for tax calculations. The last in this was that we had to negotiate with the state agents to decrease. So the penalties were already eliminated in the VDA, but we had to negotiate with the VDA agents to still further decrease the rate of interests. Why? Because without penalties and with the normal rate of interest, still our client had a huge exposure. So overall, we did 75 plus VDAs with 80% integration, and amount was saved close to $1 million. So with this, we have come to the end of our webinar and the floor is open for questions now. If anybody has, please post them in your chat windows. I guess we already have our first question, which says, who are your CPA clients? So all of our clients are top 100. All of our clients are US CPA clients. So some are from top 50 or some are from top 100 US CPA firms. Right now, we can follow you. We can follow up with you to discuss more details on this.
I can take the next one. Someone asked, like, do you have any office in the US? I don't want data to go outside the US. So, no, ma'am, sir, we do not have any offices in the US. As already discussed, we are basically the outsourcing vendor. So the CPA firm or the US based CPA firm outsource us as a sorry, give me one second. Outsource us as a vendor to work on any of the clients. So, and since you are a little, you know, careful on, do not want the data to go outside US. So for that, as already mentioned, we would require Form 7216 for the same. So once that is in place, we should be good to go.
I can take the next one. It says, are you guys SOC 2 certified? Yes, Windy Street is SOC 2 certified. We have all the security protocols in place. Data security is done by one of the prominent IT firms in India, and we have the SOC 2 certification for the same. The next,
So
yeah.
someone has asked, what is the size of your team? So we are currently 175 plus, out of which 40 plus people work exclusively for tax.
I can take up the next one. It says, do you all have US CPA in your team? Yes, we have people who have completed their CPA certifications and they work across the Windy Street in different verticals. Some work in accounting, some work in valuations, and some work in taxations.
There's someone who asked, can you share a boilerplate of your legal contract? I'm sorry, that won't be possible, but we can definitely, talk about it. If you can, like we have your email address, we can, talk more on your email address. We can get back to you on that one.
The next is, what is the size of your team you currently handle? Like Shika said, that it's a 175 member right now. Windy Street is 175 member team, out of which 20 to 30 people work in the tax team. Divya, do you want to take the usual working hours question?
Yes, sure. So our usual working hours, we start at around 10:30 in the morning and we go up to 8:39 in the evening. And this has been designed in order to make sure that we have at least 3 to 4 hours of overlap between the US and the India timings.
I can take the next one. Someone asked, do you provide trial or demo? Yes, we do. In fact, we do a free, we can do a free trial for you. So we can get back to you on that via email and we can talk more about it.
I can take up the next one. It's the question is, how does tax return cost work for firms that are outsourcing? So the tax return cost basically depends on the model on which you are working with, and what kind of teaming model are you choosing, and what kind of pricing model are you opting along with that. So once we discuss more, we'll of course we can follow up with you on that this one. Just a follow up on this, if anybody has posted their questions in the chat section, we won't be able to do that. There's a Q&A section right next to it. Kindly post all your questions there. Do not post anything in the chat section, as we won't be able to review that.
All right, with that being said, we've come to the end of our webinar. We would once again like to thank each one of you for joining. For any questions or concerns that you may have, please feel free to reach out to us at the details mentioned. Thank you and have a great day.
Hold on, Divya. Sorry, I'm so sorry. We have another last question, I think. How do you
Okay.
work through the sales tax nexus studies? So, right now, we start with first by asking this all in the entire sales data from our client. Doesn't matter if it crosses beyond the look back period, we still ask the sales data going all over whichever or whichever the date for the clients wants us to give the data for. So once we have that data, we do our nexus studies, and then if you want to know how do you work through, so there are some we do it manually as well. Plus, we rely more on softwares which we have designed internally to provide us with the sales tax nexus studies that reduces the margin of error and gives us more accurate results. And post the first step in that would be to know the exact exposure in that. Now, once we know the exact exposure, the second part of it would be how to mitigate that. So, as the people of sales tax will already know that the some states only want they give you a limited look back period or a limited statute of, period. For example, some states will only want will only want the sales data going back 3 years of the current date, and some states will only want data going back to 4 years. There are hardly in one or two states who want your sales data or who want your sales figures prior to 4 years from the current date. So that is how we negotiate with the state agents and we mitigate the exposure and interests.
All right, everyone. Thank you so much for your time. I hope you have good rest of your day. Thank you so much. Good night.
Thank you, everybody. Bye bye.
Thank
Thank you,
you.
everybody. Bye.
Bye.